Yeah, I think that visibility is pretty clearly one of the issues on this semiconductor crisis. As you said at the beginning, we anticipated to lose 100,000 this year. We are more on the 200,000. It means that basically we are anticipating some losses will also be there in the Q3, and we believe into some kind of a catch up on the Q4. But the good news is that despite the fact that the 200,000 were more than what we anticipated, the results, the economical results are good. So we are pretty resilient. So we're going to try to do the same thing in H2. So this is a situation that everybody in the automotive industry is facing, but Renault proved to be relatively resilient. So the quality strategy and the value strategy that we are, developing, it seems to pay off in a very challenging environment.
Can I ask you also about higher material prices? How much is that impacting your bottom line? And are you passing on some of those higher prices onto consumers?
I think we have anticipated also with price increase the growth of raw material prices, which had a relatively limited impact on the H1, and we have announced today that probably the impact will maybe come more on the H2. So we anticipate 500-600 million euros of impact of raw material price, but I'm sure that we will be into some kind of inflationary environment because all the competitors will try to push that into the market. So that gives us also room not only to leverage the price increases we did in the first semester, but also to continue in that kind of dynamic. But it's one of the challenges that we'll have in the next few months. That's why our guidance was to stay at the level in H2, to stay at the level of H1. Because normally the H2 for Renault has always been better than the H1.
Well, clearly, it's having a big impact on your production capabilities as well, the supply chain issues. Looking at global sales, they were up nearly 19% in the first half of 2021 versus 2022, but still down compared to H1 2019. When can we expect sales to recover to pre-pandemic levels?
I mean, we have, let's say, it's very difficult to say. We expect, obviously, that the market this year will be overall at 10% in our perimeter, 10% above 2020, but there is still room for improvement. And in our plans, we've taken a relatively conservative, let's say, dynamic of the market looking at 22, 23, 24. So for us, the important thing is that we have set a solid base for a healthy financial performance in an environment where the market is suffering. And if we do the job as we're doing, for example, on the structure of cost, as soon as the demand will come back, there will be let's say, an important swing effect on the profitability. That has always been the strategy with Renault, basically about not taking really into account as a main driver the volume, but the quality of our sales. For the time being, I think it's paying off and is actually coming before what we actually expected, because the result of 2.8% in operating margin that we have announced today is basically at the level of what we promised to the market by the end of 2023. So we are somehow at that level 2 years and a half before what we committed to.